Gonna go ahead and stream on TikTok and YouTube. See how it works this time. Worked last time. We'll see if it works again. But as people filter on over the next 5 minutes, we'll go through some of the stuff that we looked at today and some trades and look at potential. Let's see what's happening after the bell. After the bell here, I didn't even realize we had Baba earnings this morning. Did you, Mike? Anybody? Baba had earnings. I knew that, but I forgot to look. They beat on both apparently, according to TradingView, but not a great looking day for Baba. Only up 2.42% off of good earnings. So what else do we have here after the close? Of course, we have AMC. How could I fucking forget? AMC's up 5.27% on the day. AMC's up, what was that, 5.27% on the day. Alibaba reported earlier, but not necessarily a great day. IWO is going to have a lot of exposure to names like AMC and GME and stuff, small cap growth. Positive day for IWO, 0.09, which is awesome to see. That's what we would expect in a market that is encouraging risk. What else? Fubo, that's another fucking meme stock that FinTwit and everybody else told people to buy. Look at Fubo. Fubo is definitely weaker than the rest of the stocks that we've been finding with these floors here, but there is a little bit of a floor being carved. I don't like it, actually. I hate this. We have an overhead resistance that was previous support. Going back to the original drawdown off of the May earnings report. This is a fucking terrible, terrible looking chart. I'm going to post it in Discord just for transparency so we can look back on it later. Fubo's chart looks absolutely awful, but it does report after hours, so I don't know. I can't believe at one point this was a $40-something stock. What is this? At one point it was a fucking $60 stock. It is now $2.95. Man, Stock Talk and FinTwit just scammed the shit out of a lot of people selling them absolute dog shit like this. Absolutely the worst. See, what else do we got? After hours, Twilio and Carvana. Starbulk, interested with Starbulk. Twilio, after hours here. Bet you this looks a little bit better than Fubo. It does. So Twilio looks a little bit better than Fubo. Still not something that I would gamble on here. ER, we're not getting a series of higher highs, whereas other names were getting higher highs prior to their ER. So there's, for whatever reason, the market does not like Twilio as much as other names that are about to report. Has the same support turn resistance bias flip that Fubo does, though, at 97.50-ish. Don't like the Twilio chart. This is a packaged software name, so IGV is going to be the industry that's leading it. And right now, IGV is hitting higher highs, and for whatever reason, Twilio is not. So there's relative weakness there on the chart with Twilio, something we don't want to get. We don't want to get in front of. Fuck that. We want to stack the edge in our favor, and right now, Twilio is not it. Let's see what else we have. Carvana. This was an interesting setup that we were looking at on stream a few nights ago. We got the breakout up and over our resistance area at 3170, 3175. Pullback yesterday, reports after hours, currently down 2.87%. This is probably one of the best case scenarios of can you die jumping out of a basement. This thing is probably going to report absolutely abysmal results, and for whatever reason, the market is going to reward it by popping up 5 to 10%. Would not surprise me. I don't think anybody in the group has a position in Carvana, but there were 5 and 6 to 1 R to Rs yesterday on the options chain. I do not believe that those R to Rs exist anymore. We can go and check in September. I think at the time we were looking at, I don't even remember what we were looking at. Price, the 45s. We're looking at the September 45s, and we're going to spread this because IV up here is all the way up at 156. So we're going to try to find something, but there's no open interest. Where were we looking at the Septembers or Octobers? Man, there's nothing here. So fuck Carvana. No open interest on fucking anything. Oh, I was looking at the September 9th. I'm an idiot. September 16th do have open interest on them. Once again, 45s is what we were originally looking at potentially. So probably a 45.50 call debit spread. You're getting a 4-1, actually. I'm surprised. So they've repriced themselves, probably because Carvana came down today. So you're getting a little bit better than a 4-1 by buying the 45 and selling the 50, 43 days out. Carvana earnings after hours. Getting about a 4.25 to 1 risk to reward. So for every dollar you are risking, you have the opportunity to make $4.5 in return. And max profit is going to be sitting somewhere around this area, which the market has already attempted to price in at one point and was unable to. We have placed in a floor, though, so something to consider. The market has changed since Carvana was there before. We are now rewarding risk, and there's an opportunity to trade a 4-1 after hours with Carvana. I don't think anybody in the group is in it, but I was looking at that yesterday as a potential play. Starbulk, something that we did trade earlier this year. We played this horizontal level break that you can see right here, where we're getting exposure into tankers. Traded Starbulk and Zim and stuff like that. Looks like we are reporting after hours, and this looks abysmal. Terrible fucking chart. Absolutely awful, actually. Go ahead and extend that level over, because for whatever reason, the market likes to fight at $25. Mike, do you still hold any shares in Starbulk, or are you completely out of it?
I have my full positions, though.
You're collecting dividends?
Yeah.
Got it.
I'm curious what they say. They dropped their dividend significantly after the earnings. I'll probably close everything out.
Well, they fucking had a huge dividend back in June, remember?
Yeah.
Got it. Okay, cool. That's it. That wraps up after hours. Tomorrow morning we have DraftKings. This was a potential trade idea that we were looking at inside the group. I don't think anybody got long DraftKings because we didn't get the pullback, but obvious setup here. We had a series of higher lows, horizontal area at around 1450 with the breakout. We got the breakout 2 days ago, looking for a pullback yesterday. Didn't get it. At least we were looking for a 1450 pullback, so we did not get into DraftKings. They do report tomorrow, and Penn already reported this morning and missed, so something to consider. I think Penn is the weaker of the two companies, but they are going to generally run together. So Penn is pulling back, actually, unless Penn did something crazy like cut guidance to fucking zero. This might be a BRB. I think you mentioned this earlier. This might be a BRB setup for Penn. It does have a kind of nasty blown off the top candle on the daily, though, but that could be anticipation of DraftKings, right? 34.50. Let's look at the Penn options chart and see if there's anything here. Give me 1 sec. I'll show you right now how you calculate the 4-1. 34.50 for Penn. What's a realistic price? $40 is what we were looking at. So it's September 40s. These are cheap, man. 40-45 call debit spread in September is running about a 4.5 to 1 risk to reward. So if you look at this, I'm using Tastyworks, but you can use any brokerage. It doesn't matter. Look at the amount that it costs to get into the play versus the max profit and do simple division. So if you're looking to, if your overall risk is $82, for example, for this spread, and your overall max profit is $4.18, that'll give you a little bit more than a 4-to-1 risk to reward. So for every dollar you're risking, you have the opportunity to make 4.25, 4.3, something like that. Use a calculator if you can't do the math in your head, but you're going to do it a few times. You're going to start recognizing the same sorts of max losses and max profits, and you're going to know right off the top of your head whether it's a 4-to-1 or not. So yeah, Penn has a 4-to-1 setup for September, buying the 40, selling the 45. It did have an abysmal earnings, so something to consider. DraftKings is opening their earnings up tomorrow. So the R to R is there, but is the actual chart there? CGC reports tomorrow. Are they the first big weed company? This chart looks like shit. Fuck it. Don't care anymore. Absolutely awful. And that's it. I'll look one more time at AMC. Not that anybody in our group is fucking buying it, but AMC currently 19.24. We have coasted above the 50 RSI since the middle of June, man. End of May, actually. I'm a little surprised. Last 70-something days, we've been above the 50 RSI or at the 50 RSI. And we are technically hitting a series of higher highs off of those May lows. Isn't that wild? AMC is following the same sort of price action that we've been looking at other stronger stocks. It's fucking insane. I can't imagine a world where AMC beats earnings, but the market is not acting rationally towards earnings right now. So maybe AMC does surprise and just fucking blow shorts out of the water. Who knows here? GameStop tends to follow AMC, and likewise, probably say GameStop is the older brother of AMC, but yeah, very hard to imagine GameStop at one point being, at the time it was $400, right? Then we got a stock split, but wild looking chart. Okay. If anybody has any questions in the chat about open positions or existing trades, feel free. Hanno's in AMD, and for stream, YouTube, you've heard this. If you've been watching the Power Hour sessions and the strategy sessions, YouTube, you know that AMD is one of the plays that we've been looking at extensively, and one of our traders in here, Hanno, has played this 3 separate times over the last 4 weeks now. And he actually lowered his average entry cost on the pullback yesterday. So yesterday's pullback, he layered in more calls, and this thing is up a massive 6.18%. This might be one of Hanno's biggest trades ever. He's driving right now, I think, so he's not on. But this is a triple-digit winner right now, and I hope that he shaves some profit off just in case. That's insane. I'm surprised in a good way. I got filled on the Riot play. Did you get into anything, Mike? BTC related? Riot, Mara, or Silvergate? Or coin?
I get in. I joined you on Riot.
What did you get? What did you play the same thing I did?
I wasn't sure what I played. A $12 call in September.
I grabbed the 10-11 call debit spread. Either way, that's okay. All right. I think I grabbed a 10-11. Yeah, 10-11 call debit spread. I'm currently break even on it. I took all day to get filled. Are you up on a firm today?
Today I am.
Nice. So stream, here's another trade. A firm. Obviously, if you guys watch these streams twice a day, every single day, a lot of this stuff is going to become repetitive, but that's kind of the point. You want to stick with shit that's working. And right now, a firm is breaking up and over our risk on level at 31. RSI gracefully floating above the 50. A massive 10% ADR. For a 10 ADR, this thing has not moved very much today, huh? Has not moved very much. Internet software services name. All right. Let's take a look at Koifin really quick. Let's look at the quarter-to-date chart first. Let's go with sectors, and then we'll bring it down to the 5-day. 5-day Koifin chart showing us that we have made the right decision over the last 4 weeks. Congratulations going along consumer discretionary and XLK. We did it. I'm very proud of us for being able to nail that reversal in June. And the 5-day here, once again, they're rewarding risk. Discretionary and tech are up. Discretionary up 6.88. Tech up 3.74 over the last 5 days. Let's niche it down into industries really quick. PBW is up again today, 28% on the quarter, followed by semiconductors up 20.5, solar up 17. Internet names, look at that. Okay, here's something that's a little bit out of the ordinary. Internet names, FDN, are up 16.75% on the quarter. So FDN is legitimately the worst performing industry this year. And for whatever reason, it's popping up 6%. So clean energy up 7.7% on the week so far over the last 5 days. I think, does anybody here that I can recall? I think there's only one guy in our group, Dustin, who's in a clean energy aim, and he bought the dip in First Solar. So he should be up in this trade. The First Solar trade. Let's, before I go into factor analysis, I want to look at PBW really quick. Let's get a general idea of what area of clean energy is actually moving the best. Let's niche it down to the 1 month return. 1 month return. Let's see, financials and industrials. Those are the two. What the fuck, financials? There's only probably one company in financials. It's industrials is where we're popping off. 45.38% of this ETF is industrials. And those are going to EOSE, a name that we've charted but not been able to buy effectively, potentially getting a pullback, but I don't want to buy that. Fuck that. Ride. This is the name that popped off today. I bet you this is why. Fucking Ride is only up 1.71% right now, but at one point it was up 27%. Am I reading this right? It's come down that much? It has. That is an impressive pump and dump by fucking Lordstown Motors. That's fucking wild to me. Let's see. Let's go to factor analysis really quick. Quarter to date. Right now, quarter to date, large cap growth beating SPY the most, 4.21% over the last 5 weeks, followed by small cap growth. That's your AMC, GME, biotech names, etc. Mid cap growth, for whatever reason, slight down over the last 2 days, but still up 2.17. And small caps themselves up 1% on SPY. So small caps representing risk on sentiment in the market are gaining against the major market indexes. No surprise, big cap value. All your big energy and financial names are continuing to drop against SPY, hitting new lows on the quarter. Last 5 days, IVW is up 1.83 on SPY and IWO is up 0.82. So once again, the market is rewarding risk. There's no other way to put it. If you're in the group and you have questions regarding trades that you're currently in, feel free to post them. We'll go through them and make sure that you know what you're doing in terms of stops and take profits. I'm running a basic scan here, 50-day high, average volume over 1 million, optionable and shortable. There's 230 names, so I'm going to go ahead and change from open to up. We now have 160 names. Posted the link if you guys want to follow along. What do we think about coin? I think coin is an opportunity if you got in early, but up at this point, it's too risky for us. So we bought some names that went along with coin. You can see the chart that we had on coin prior to today's gap up. We liked it above $78. That was our risk on level. I don't know if you can see the number, but over here it says 77.74. That was our trigger to go long. We did not go long yesterday because we expected a potential pullback in coin because it was a high volume breakout, and obviously today we got the big gap up, so we did not chase it. Instead, we went and found names that generally run with coin that had better risk to reward at that current price, things like Riot, things like Mara. So we did get long Riot, a few of us, with anticipation of continued price action to the upside, RSI above 50, and it offered a better risk to reward than coin did at the time. If coin does come down and fill this gap to the downside, that would be an excellent opportunity to enter if you expect coin to continue up. But if you essentially bought coin long today with any sort of options contract, you are down deep right now, and that's why we do not chase, which sucks because let's say coin goes up 20% over the next 3 days, you're going to have to start in a hole of negative 80%, and that's not something we want to do. So we like coin, but maybe today was not the best day to buy it if you weren't already in it. Let's see. Let's go through some of these charts here. 161. Actually, I'm going to go back and let's filter this through sector. For anybody that's watching the stream here, we are on Discord. So if I'm responding and talking to people that's not on stream, just know that I'm responding to people on Discord. MDU must have had earnings today. It's the only basic materials name up. Mid-cap building material. So this is probably an ITB related name, MDU. I don't think this is something we're going to want to buy, but yeah, nope, not something we want to buy. Netflix up. So Netflix is an interesting name, right? We've talked about this. We have a horizontal level here on Netflix, and gaps don't need to fill, but here's something to consider. We talked about that, right? Netflix. Spotify. I think Hanno's in Spotify. says he's up in Spotify. You see the horizontal level pivot that we looked above 116. I think he got in 2 days ago. So Hano's up in Spotify. I don't know where his price target is, though. Qpeng once again. 50-day high. A bunch of consumer cyclical. So we're seeing the same sorts of stocks continue to run here. Amazon. I did not look at Amazon one time today. Look at the push on Amazon. That's awesome. I don't know why I have my moving averages off, but Amazon's coming up and going to test the 200-day moving average probably tomorrow. Now that I'm on trading, you might as well look at the top 5 per sector and get a general idea of what's going on. Energy down. OXY, this is the company that Warren Buffett has bought. 10% of the goddamn company is down 5% today. Consumer staples across the board, at least the top 5 are down. Walmart taking a shit. Walmart came out with some news saying they were going to lay off hundreds or thousands of corporate workers. So Walmart, a little bit of FUD. Amazon up 2.32. Tesla's up 0.22. Tesla basing above the 200-day moving average is fucking awesome. Materials, APD, looks like a bunch of these names reported today because they are up. So materials continuing to show strength. Visa and technology in general. NVIDIA, nice move on NVIDIA today, 1.6%, but AMD is up 6%. So for whatever reason, AMD is showing relative strength across the broader semiconductor market. I was looking at Enphase earlier today because I really like this trade. Enphase is up approximately 1.94%, but we are near an all-time high. So the market likes AMD today. I'm not entirely sure why. Netflix up, Meta up, T-Mobile's up again. That potential Disney opportunity we were looking at above the 111, 112 area, still caught underneath overhead resistance, current price 108. Okay, so that was top 5 sectors. We know what sectors are moving well today and which ones aren't. Kind of surprised to see some of the healthcare related names down today, even though XBI was ripping. So Abivai looks like it's going to break down after good earnings. So Abivai actually looks like we're going to fucking leg down here. Check out this. I don't think we should be shorting anything in a market that is very clearly rewarding risk, but check out that. Bounce off of the 200-day moving average to the downside. RSI slammed across the 25-30 area, and we have very obvious levels that we could, at the very minimum, identify. So Abivai not looking great here. Okay, let's keep going through these names. We got Rivian up, 50-day high. Workhorse. Oh, shit. Shout out Turtle. If you're watching this stream somewhere, buddy, in Nepal, your Workhorse is up huge today. 11.45%. Up and over the 200-day moving average. Bounced off of the 50 RSI prior to earnings. Look at that, man. Why? It has earnings coming up in a few sessions. Why is it bouncing today? I have no idea. I'm not even going to post it. Actually, I will post it because this impacts our Rivian play. But Workhorse up huge today. Let's see what else. If you're watching the stream and you don't know what I'm doing, we are scanning through 50-day highs with average volume over 1 million. So we're looking to get rid of all of the shit that most people can't trade anyway. We don't care about it. We also have we have a toggle on for the options traders to make sure that you can actually buy an option on it. There's an options chain available. Not guaranteeing volume on that options chain, but going to get through most of these financials because most of them are ETFs that are hitting highs, like these growth ETFs and stuff. That's awesome, but we don't trade these usually. XBI we do, though. XBI 88.76. Talk about XBI really quick because it's important. You look at this chart that we have here on XBI for the stream. This was our first real indication that the market may be shifting. We saw this low here in May, then a retest down here in June 14th. Today is August 4th. We started going long in risk names after we saw the second floor here in June 14th-ish form, we started going, it's strange that the most risky areas of the market are not hitting lower lows while the other areas of the market were. We posted about it on TikTok. We posted about it on YouTube. You can go back and watch the videos, or for the TikTok guys, they're watching this right now. There is a YouTube video that I put out like 6 or 7 weeks ago explaining this exact thing about XBI breaking out and why it's an important indicator for the overall market. My YouTube's in my About Me or bio, or whatever the fuck you want to call it. Highly suggest going and checking out that video, because not only is XBI itself up 21.5% since that video came out, but the rest of the market is as well. So it dives into the idea of how to identify market breadth, risk on versus risk off areas of the market, differences between small cap growth and small cap value, everything. So if you want to become a better trader and make better decisions on which tickers to actually trade, that video is free. It's on YouTube. Go to it. It's in my link. Anyway, XBI is up. That's a big deal. Let's see what else. Landed in Moderna. Moderna is up and over the 200-day moving average. Moderna is up 5.48% today, and it was up 15.97 yesterday. God damn. Landon is getting paid on his Moderna position. A lot of shit tickers in the healthcare space are up. Let's skip over most of them though, because we already have positions in them. CVS is up. Looks like we came back down though, gapped up and pulled back. Still technically up though, CVS on the day. I think Callow's in CVS. Callow is in CVS. It's up 0.7% off of today's high. The gap up. Looks like we did potentially fill a gap though. Let's see. The low here is 102 on the dot. High yesterday of 101.88. So 12 cents off gap fill. CVS. Nice play by Callow. So you continue to go through. There's about 5 more pages of charts here. Towards the end of the session, though, more and more names are hitting 50-day highs. We started this scan at 160, and we're currently at 175. It's only been about 15 minutes, so 15 names have joined in 15 minutes. Looks like end of the market. Without even looking at SPY, I would say that the market is probably rallying right now because there's more and more names hitting the 50-day highs. But we'll see. What do I think? What? Feel free. I'm sorry, I'm not watching the comments on here. I randomly look at it. Let me know what I said. I'm streaming on 2 different platforms and talking in Discord, so it can get fucking chaotic. GitLab's up again. GTLB. Not the absolute worst idea, I think, for a newer IPO, end of 2021. Same sort of price action where we stamped out that May low, unable to reach back down there, series of higher highs. At a 6.76 ADR, this chart doesn't really have a whole lot of conviction, though. You'd expect some bigger moves intraday. Anybody? I don't know if there's anybody on Discord that wants to answer this, but why do we think healthcare is popping up? What's the correct answer? If somebody were to ask you, like, why do you think healthcare is moving? This is a good question, by the way. Callow closed his CVS position for 237%. That's dope. Anybody want to answer that? See you later, alligator asked the question. Why do we think healthcare is popping up? I'll answer while you guys are typing. I think the answer is, and I don't mean this to be rude, but I don't know and I don't care. And I think that's a good way to approach something if you're a technical trader. So if you're a technical trader, the only thing that matters to you is the price on the chart, right? We understand that price discounts everything. all relevant information should be present wherever price is. So as new information is revealed, price will naturally navigate towards whatever the market thinks the equilibrium is. Buyers and sellers interact. More buyers than sellers, it's going to go up. More sellers than buyers, it's going to go down, etc. Why is healthcare going up? It's because people were buying it. And so as a technical trader, it's not up for us. It's not really our job to figure out why something's going up. It is our job, however, to identify it and take the trade. So this is why I use this XBI as an example. Healthcare has a lot of different industries within it. Medical and nursing staffing companies, medical devices companies, biotech, health, like insurance, healthcare, shit like that, right? So we can actually niche down into the sector. So if we see XLV, for example, this is the healthcare sector. The healthcare sector itself is not really doing that much. It's not bad though, right? Healthcare sector has been, for the most part, trading horizontally while everything else in the market has been going down. So we would say, the healthcare sector is showing relative strength. It might not be time to buy major healthcare names, but at the very minimum, the market's not selling them. And that's a clue, okay? Why is the market not selling healthcare? So then we actually dove into different industries within healthcare, and that's when we found XBI or ticker IBB, whichever one you want to use. They're both biotech ETFs. They're just weighted a little differently. And we found a relationship that we were looking at between the May low here and the June low here. And we said, listen, if stocks came down and hit this May low, the rest of the market, if you look at SPY, look at the May low here. Let me draw an arrow. That's the May low, right? And here's the June low that we keep talking about right here. So SPY gapped down and continued and hit a new low of about anywhere between 5 and 10%. So the major market indexes were capitulating off of the May lows. Why did XBI not do the same thing, right? We hit a low in May, and then we hit the same low in June. So SPY and the Qs, IWM, all of these names were hitting lower lows. What was it about biotech that made the market say, wait a minute, we want to continue to buy XBI at a higher rate, or at the very minimum, sell less of it than we are selling the large cap stocks that make up the S&P 500. We noticed this relationship and we said, listen, it might not be time to buy this yet, but there is something going on. And all of this is logged on YouTube and my TikTok. You can go back a few videos and you can hear me screaming about it almost 2 months ago. And then we just simply set levels, just like any technical trader would. Where's a level on XBI that makes sense to buy? Breakout, we set above 72, 73. It broke out, we bought it. So we bought the $72, $73 area breakout. It's up 21%. So for a technical trader, it doesn't matter why something is happening. What matters is being able to identify it and play it. So when you can differentiate the two between like a sentiment trader, a fundamental trader, and a technical trader, you can become a better professional within whatever sphere of influence you're trying to navigate the markets. So Callow said monkeypox. There's the that's the answer people want to hear. Monkeypox, bro. What did you get filled on for a shop, if you don't mind? Mike, feel free. I'm gonna sip some coffee while you talk through it. Let me pull up the chart. Go ahead.
So I'm playing the breakout retest, the BRB setup that we like. And I got filled on September 45.50 call debit spread.
And what are you looking to get out of it?
I went with the spread. So $50 is my target. I want the spread because the IV rank is kind of high still. IV is 80%-ish in September, so so I went for the spread. And then I like the BRB because it's low risk. If we break down under this, basically we break down below 40, probably cut my position.
So this is either a BRB tomorrow or you're out.
Yep.
All right, cool. Makes sense to me. Series of higher highs. It's not the cleanest looking set of higher highs, but it's a set of higher highs going back to June. And we were unable to break this base at $30. There's definitely something going on with SHOP. For whatever reason, the market didn't let this thing drop for 82 days below 30. You're identifying a key opportunity with a horizontal level break at 40, 50-ish. And you said, listen, man, we're getting a pullback today. If we get another gap down tomorrow, I'm going to immediately close for a small loss, but the risk to reward is there because you're going to get a discount on the opportunity to go long because you're buying on a pullback. Fair?
Yep.
There you go.
Sounds exactly right.
There you go. It's smart thinking, man. Cool. Okay. Hopefully people we're getting some more traction on YouTube, man. Hopefully I'm getting more views on like the lives that we post after they're done being live than I'm getting on the actual videos I'm posting. So hopefully people are like sitting through some of this shit on 2x speed and learning something, because we go through like complete trade ideas frequently on the streams. Let's see here. Check out Uber. Did you see that yesterday they announced that for the very first time they're cash flow positive? Ever. First time. Up again today, 5.45%. Yesterday, 3.21. Day of earnings, 18.9. That's fucking wild. All right, let's go through two of the trades that I'm in so stream can see it. I took a... Right now what I'm doing, last year I had a small options account. Performed very well. As a matter of fact, if you have a small options account, watch my shameless plug here, boys. I have a pinned tweet in my Twitter. 5 rules I stuck to while successfully 10xing a small options account. You can see not only the 5 rules that I stayed by to turn 200 into 2,000. It took me 71 trades, so there was no YOLOs. There was no lottos. It was just fucking pure dick smashing trading. And I wanted to kill myself at the time, but it worked. You can go through every single post that I made with all of the different tips and tricks that I found, including the proof that they're real trades. And at the very end, you can download my entire transaction history audited by Tastyworks. So you can actually go through every single trade and you can figure out what was I thinking at the time. It's all there. It's all audited. It's all 100% transparent. So if you do have a small options account and you find yourself slamming your head against the wall, you're unable to grow it, I'm not going to tell you it's easy. As a matter of fact, it's probably one of the hardest things I've ever done. And I said that. Small accounts challenges are incredibly hard. There's just not enough capital to avoid blowing up an account after 1 or 2 bad trades. But I do my best to try to show you guys how I was able to do it. Hopefully you guys can learn something. I'm doing it again. So I pulled the capital out. I took the options account up to 50 grand at the peak of this year trading Chevron. I got super lucky with Chevron. And then I dwindled it down to about 32K, and then I decided to pull it out, and I bought an apartment building in Brazil. So now I'm running it again. I just loaded up an account. We're going to try to do it again. And my first 2 positions here are Rivian and Riot. Right now Rivian is up 13%. Riot is down 9%. So we're going to look at both of these trades. Rivian, basic horizontal level breakdown, 32.88. We like that, or breakout rather. We like the breakout. We have a couple of days towards earnings, so I don't necessarily have to worry about some fucking shitty news that comes out around earnings. We have until next week. I bought September's. I usually buy everything called debit spread at the beginning because it reduces overall capital exposure. So I bought the 10 and sold the 11 on Rivian. That was a lie. That's right. I bought the 40 and sold the 45 on Rivian. So you can see, based off of my fibs here, I'm going to show you guys, I'll zoom in. The fib at 1.618, that extension is generally our first price target, is pricing in a $41.24 price, right? So I went and bought the $40 calls and to hedge against IV and to reduce my overall capital exposure, I sold the 50 or the 45s. So 40, 45s, September's, call debit spreads. And I'm going to ride these things for at least a few more days. I typically don't hold things through earnings unless I'm up huge. But it's just about padding the capital in your account. At $200, you can't really afford to lose very often. And so, these 20 and 30% little winners add up. You can start to breathe a little bit more when you get up to $500. That's my goal. So Rivian right now is up, and the Riot position is down slight. Now it's 4.8%. You can see how volatile these contracts are, but grabbed Riot off of Coin. Somebody asked about Coin earlier. So Coin, obviously, big news of BlackRock. Big gap up and then sold off. We do not chase things like this, even with a big account. It's a bad idea. We would prefer to buy on a down day, specifically against a level that we can use as risk. We know where to put our stops if we have a horizontal level. So if we get a breakout, we buy on the pullback, and then we place our stop somewhere below that level. It makes way more sense, guys. And you actually know where you're wrong, which is the most important part of trading. So I bought Riot because it was cheaper than Mara, and the setup's not particularly bad. Also, just for everybody that trades crypto as well, if you like trading like shit like Bitcoin and you do not use leverage, these small cap or medium cap, depending on what day of the week they're trading, companies offer almost a one-to-one sort of price action, and it feels like it's leverage. So for every 1% BTC moves, these small cap equities companies that have direct exposure to Bitcoin move fucking 10%. For example, I don't know if you can see this on stream, but on YouTube you can. Riot has a massive ADR of 11.17. That means intraday, on average, Riot moves 11 fucking percent. Bitcoin does not. So if you like Bitcoin and you expect it to go up and you're trading it, you're not buying it and holding it for fucking ever, and you're just simply looking at it as a trading vehicle, things like Riot and Mara offer an incredible opportunity, and so therefore I went out and bought Riot. The capital exposure itself is not that much. It cost me $21 to get into a Riot play. It's a 4-to-1 risk to reward, $21 cost, and max profit is around 80. So a 4-to-1-ish on this play. So if this hits, looking to sell somewhere in between 50 and 100% on a gap up day, pad the account more and more. Rivian is also a 4-to-1. This is something that I've realized that I like to stick with. If you read the very first response to that pinned post, I said that I refuse to trade anything less than a 3-to-1 risk, but I typically try to find a 4-to-1. It says right here, right? And if you actually look at my stats, and the guys in Discord, you probably are somewhere similar because we trade a lot of the same things. I'm targeting 4-to-1 risk to reward, right? So for every $1 I'm risking, I'm looking to get $4 back. The final stats, my average winning trade was $130.85. The average losing trade was $57.66. So that gave me a final risk to reward of 2.26. If I was originally targeting a 2-to-1 or only a 3-to-1, this R to R would most likely be a lot lower. So by targeting the 4-to-1, it gives me a lot of opportunity to continually fuck up. Seriously. So I, ended the challenge or whatever at $2,326.92 off of a $200 account. My final R to R per trade was 2.26. Something to consider when you're looking at trades if you're actually trading and not just doing this as a fun activity to gamble. Also, by targeting that higher risk to reward, you're able to lose more often than win, right? It makes sense. It's just simple math. My winning ratio was 46.5% win, 53.5% loss. So I actually lost more than I won. But with a 2.26 R to R, your break-even winning rate is 30.67%. You can win 31% of your fucking trades and still be break-even if you are targeting a 2.26 R to R. So I targeted a 4.4-to-1. I ended up with a 2.26, and I was profitable because my break-even rate was 30.67, but I actually won 46.5% of my trades. Most of the stream is just going to not give two shits about any of this stuff because it's not glitz and glamour and Lambos, but this is legitimately how you become a good trader. People aren't going to tell you this shit because it doesn't sell subs, but data wins. So hopefully this shit helps you guys. I'm in the Rivian play. Rivian looks okay here, and I'm in the Riot play. We'll see what happens tomorrow. Okay, I've been rambling in Discord. Anybody have anything you want to go through? Callow's waiting to get filled on shop as well. What are bonds doing? Bonds are chopping around. Expected bonds to break out. They're not. They're not looking terrible, but they're definitely not breaking out the way that we thought. Factor analysis. IVW against SPY, baby. Large cap growth is fucking ripping. Look at this series of higher highs off of the May lows. It's not a coincidence. This May date is not a coincidence. Since the May low on the 26th, this is a relative performance or relative behavioral stat, right? We're taking the large cap growth IVW ETF against SPY, so we're getting a relative strength ratio. It's up approximately 7% over 70 days. That's fucking massive. So essentially what this is saying is over the last 80 days, large cap growth has outperformed SPY. So if you're looking to buy the strongest stocks and you can identify these sorts of areas, you would want to be buying large cap growth back in May. IWO is small cap growth. It's up almost 11% over the same time frame. And just for tips and tricks, boys and girls, small cap generally precedes large cap. Generally, you see that all the time. Small cap is risk on. Large cap is generally less risky. So when the market decides to flood itself with cash, you would expect large cap growth to come second and some of the oversold piece of shit companies start being bought first. We found this relationship with IWO. If you see IWO made a bottom on May 12th against SPY, large cap growth made a bottom on May 26th. So what does that mean? It means that the market started buying small cap growth before large cap growth. And you can see it right here as well, May 11th and May 12th. Small cap growth has outperformed large cap growth. Does this relationship last forever? No. But you don't trade one position forever either. You try to find inefficiencies in the market and take advantage of it. If you understand relationships between different areas of the market, you can identify alpha. That's what we were able to do. So far, we're on the right side of this reversal. Large cap value continuing to break down off of the May 26th peak. We're in free fall mode right now, actually. Have you guys seen this chart? IVE against SPY. Check that out. RIP to people that are trying to buy fucking energy right now. Absolutely not the place to be. All right, guys, we got 10 minutes. Any questions regarding current trades? Landon's trying to take a Zillow earnings play. All right. Callow, what'd you get filled on shop? What did you end up doing? Go ahead and type that out. While you're typing that out, I'm going to look at update on Bulkowski's website for Thursday. Same thing he had up yesterday, so he hasn't updated it yet. $160 names. Whoops, let's take off, change from open here. 235 names hitting 50-day highs today with average volume over 1 million, optionable and shortable. Let's look at lows just to see. 35 names. 35 names. 50-day lows. It's got to be just like bad earnings plays or something. A lot of these are ETFs. Hey, look at that. The ProShares short QQQ is at a 50-day low. Okay, that's it. You got the 45.50 September 16th call debit spread on shop. That's dope. All right, I'm going to add your name to the list. Add your name to the list. Shop. Dustin's not on because he's on vacation, but his first solar position should be up. Hanno should be feeling fucking fantastic. His AMD position is up. We've been in a fucking groove, boys. Any questions? I'm going to stop the stream. Any questions on stream? I'm going to stop. Got 8 minutes. I'm going to execute some orders in the book that I have. No questions. I'm out. I'll see you guys tomorrow morning.